Money ki baat and मूल्यों की बात. Mulyo here means values. Money ki baat and मूल्यों की बात on February 8, 2017. Determining our digital future. Securing our digital future. I'm G. Ramachandran, Ramach to my associates and to my friends, and my email is indiagrow@gmail.com. You could tweet to me at ramachgramach. Mulyon ki baat, because a society without values may decline into a society without wealth. This presentation deals with business models and business values. Rinsi Anselm has contributed significantly to this presentation. Mulyon ki baat. Consider a classified advertisement from a daily called the Gulmohar Blossom. Classified ad 1 for a rental. 100 square meter apartment for rent in Gulmohar Park, rupees 30,000 per month. Email rentmaster@florafauna.com. Ad number 2. 200 square meter apartment for rent in Gulmohar Park, rupees 60,000 per month. Email rentmaster@florafauna.com. If you need to insert this advertisement in the Gulmohar Blossom, what would you do? Relative to one another, what would or what should be the cost of inserting the two classifieds be? One is a positive approach and should means a normative approach. What would or should you do? And what about Gulmohar Blossom? What should they or their owners do? A couple of suggestions. Relative to one another, the cost of the two advertisements would be driven possibly by the monetary value of ad 2 vis-a-vis ad 1. The first one talks about the rent being 30,000 and the second one talks about the rent being 60,000. If the first ad cost you 300 rupees, would it be okay for you to price a second ad at rupees 600? From a classified, let's move on to something far more important. But first, this model of pricing is called ad valorem pricing. The Gulmohar Blossom could consider using the ad valorem pricing for ads. What's more serious than the ad is eye care. In Gulmohar Vision Care, cost of retinal detachment surgery for patient with monthly salary of rupees 30,000, the surgery would cost you 3,000 rupees. If your monthly salary is 60,000 rupees, the same surgery would cost you 6,000 rupees. Therefore, the cost of retinal detachment surgery is 10% of the monthly salary of the patient who comes in. What should you do? You are a visionary, aren't you? We all say this when we write that statement of purpose. We all are visionaries in our own minds. In which case, how would you build an ethical, effective, efficient, and sustainable business that corrects, improves, and restores vision to our citizens? Your revenue model has to reckon with the following: costs, incremental costs, risks, incremental risks, and value rendered. So let's go on now to a far more important example, a real-life example. Gulmohar Dabbawalas. Dabbawalas are very, very famous. It's actually a digital business. Look at the graphic here. They've got all kinds of code, alphabet, numerics, so that the Dabbawala can render a great service to her or his clients. Dabbawalas are so legendary, they're also digital. Delivered on time each time, and the very prince felicitated them. The Dabbawalas will become legends in their own time. Gulmohar Dabbawalas, there's a channel called the Marine Lines Group. They deliver food from Gulmohar Park to Marine Lines. And here's their price schedule. The Gulmohar Dabbawalas offer two levels of service. A normal service, which is 4-star, it costs us rupees 1,000 per month. The customer's meal box is placed inside their meal box, codified meal box. And the premium is priced at 1,250, which is 5-star. 1,000 for 4-star, 1,250 for 5-star. The incremental price for premium is 250 rupees per month. But the outer box, which is codified and enables the dabbawalas to collect the meals and deliver them, that would remain the same. The question then is, are the efforts and the risks in the round trip for the normal service and the premium service the same? The answer is yes, of course. But from a customer's perspective, are the values delivered in the round trip the same? No, probably the premium meal will comprise costly vegetables, while the normal meal that the homemaker sends will comprise ordinary mamuli vegetables. There are two levels of services, 4-star and 5-star, and the 5-star costs a little more, though the actual cost of rendering the service is absolutely the same. In which case, we need to ask a question. Is rupees 250 some kind of a tax? The answer is yes, for several reasons. First, it's a tax because it's not related to effort, cost, incremental cost, risk, and incremental risk. Moreover, the rupees 250 is based on self-declaration. The homemaker says this is a premium meal. There could be some official assessment and random scrutiny based on some sampling methodology. The point is, we are now seeing the Gulmohar Dabbawala as a de facto tax collector. Are the Dabbawalas of Gulmohar de facto tax collectors? To repeat the question, are the Dabbawalas of Gulmohar de facto tax collectors? You would say yes, but the truth is they don't do this. The normal service and the premium service that I cited now are absolutely hypothetical. There's only one service. They take it in a box regardless of what food you give. So the round trip cost per month for all the levels of service remains the same. So sorry, my dear friends, you're far too honorable and pragmatic to be anything like a tax collector. We'll now move on to the commercial banking sector and the issuance of bank drafts. When you look at the schedule, you would notice that rupees 3 per thousand is what the banks would want. This may be absolutely hypothetical, but the deal is very clear. A draft is issued to a customer from a customer's own funds. There's no particular risk that the bank faces, yet you would notice that they have adopted an ad valorem policy. The ad valorem pricing for bank drafts in this particular example is rupees 3 per thousand. A bank draft is issued to a customer from that customer's own funds. So when you look at the risks, you would notice that the issuing bank faces no credit risk. The receiving bank too doesn't face any credit risk. All drafts are cleared by or through the Reserve Bank of India, the RBI, and both the issuing bank and the recipient bank are licensed, regulated, and supervised by the Reserve Bank of India. The issuing bank and the receiving bank do not face any market risk, since the instrument is for a stated par or face value. Let's consider the costs of issuing a bank draft. A bank draft is issued to a customer by punching a couple of keys, printing, and then signing the draft. First, the issuing bank faces no major incremental effort in punching keys on a keyboard. Whether you punch 100,000 or 200,000, the number of punches remains the same. The size of the paper is the same. Moreover, the amount of printing ink is the same. The case for ad valorem commission is therefore weak. The only incremental cost may pertain to the second signature that's often required in the case of high-value drafts. So, the banks and the RBI think that the ad valorem model is an apt and acceptable business model. But in my view, it's terribly and thoroughly weak because neither the cost nor the risk are any different. In our digital world And in our times of digitalization, the cost and the risk to generate a draft for rupees 200,000 is the same as the cost and the risk to generate a draft for rupees 100,000. The case for ad valorem commission for the issuance of bank drafts is weak. And let's review all the other three examples. The case for rent-based classified ad fee does not look good. Both the ads have the same number of characters and words. And what about the salary-based retinal detachment surgery? It looks insane and inhuman because the efforts and the risks are absolutely the same. It looks like someone with a salary of 60,000 is paying a higher tax because the service cost is absolutely the same, the one that the person with a salary of 30,000 receives. Premium and normal compensation to dabbawalas obviously is very comical because the box size is the same. We need to let the cat out of the bag now. The tiger, the Reserve Bank of India, has to give new stripes to the small cats, our banks. We can't live with a commission-based draft issuance system. The RBI has to be the bug that it portrays. We have to be tigers now. If the Indian economy is to turn into a tiger economy, the starting point should be the Reserve Bank of India. It ought to play tiger here on. It ought to play tiger here on, and it has to unleash the energy of a tiger. Urja comes to my mind. Urja comes to my mind. Some of India's businesses love skimming, skinning, creaming, milking, and plucking low-hanging fruits. The time has come to stop these. India's digital dreams should not be snuffed out by its legacy systems, legacy institutions, and legacy business models. Though surely false, the story of the broad gauge track is one of great educational value. The story of the evolution of the standard or broad gauge railway track is very educative. It starts with the Roman times. It said that Roman wagons had a distance between the two wagon wheels and they would cause a rut on the soil tracks, and other wagon makers would thereafterwards therefore place the wagon wheels in such a manner that the interwheel distance would remain the same or identical to the distance caused between the two trails in the rut. So what occurred many hundreds of years ago continues, and therefore I have this picture from Rome to Royapuram. Royapuram is a railway station in Chennai, and Royapuram is one of the bigger electric locomotive bases, and it's famous for its wonderful high-power electric locomotives. And notice the tracks here, that's broad gauge, and it said that the distance between the two rails in a track is identical to the distance between the wheel marks or the rut caused in the soil in the Roman days. India's digital dreams should not be snuffed out by its legacy systems, legacy institutions, and legacy business models. That's very clear. We can't let this continue. So the example I need to look into is India's Mangalyaan as an inspirational example. India's Mangalyaan is an inspirational example. Everything about Mangalyaan is indigenous. We reached Mars at a smaller budget than a Hollywood movie, Prime Minister Narendra Modi said, adding, India is the only country to reach Mars on its first attempt. If this is not talent, then what is? A 1 kilometer auto rickshaw ride in Ahmedabad takes rupees 10, and India reached Mars at rupees 7 per kilometer, which is really amazing, the Prime Minister said, while talking about India's talent pool and potential to become one of the topmost countries in the world. We need to apply this talent to our digital economy. So Royapuram is less than 100 kilometers away from Sriharikota, from where Mangalyaan was put into orbit. We did not allow the undesirable effects of legacy thinking to adversely affect the Mangalyaan project. Therefore, we should not allow the undesirable effects of the bank draft commission model to adversely affect our digital dreams. We got to be very careful. We got to be very, very ambitious. So we have one principal objective: to earnestly ensure that the efforts of the Niti Aayog of the Government of India pertinent to digital transformation do not get derailed by inappropriate business models of service providers. The Committee of Chief Ministers on Digital Payments submitted an interim report to the Honorable Prime Minister on January 24, 2017. This committee was constituted by the Niti Aayog of the Government of India on November 30, 2016. This committee was asked to suggest measures to enable all sections of the population to migrate to the digital payments. So we wanted mass migration. The second part, we wanted to leapfrog, to recommend measures to leapfrog into the advanced digital payment systems of global standards. But I think we got to beat the global standards. The committee has identified 7 constraints, and one of the principal constraints is this: digital transactions are costlier than cash transactions. The committee's report reflects the prevailing economic reality, but cash is legacy. That's the way we see it. And Mars just does not appreciate this. Mars needs a different thinking. Space age thinking ought to be very different. We can't be caught up in the old economic reality of having to live with high-priced cash systems, which are then extended into digital systems. The reality is, digital transactions are not costlier than cash. The truth is, money has no physicality and no tangibility at all at origin. Money can be digitized at origin. Money should be digitized at origin. Therefore, we need a huge attitudinal change. We need a very big attitudinal change. Digital money system is cheaper than cash money system. Cash money system CMS is costlier than digital money system DMS. The components of total cost in the context of money are 5: value creation, value preservation, value protection, value transmission, value attribution. And in this context, digital money system is a winner in each of the 5 components. Cash money system is a loser in each of the 5 components. Therefore, it will be very inappropriate, wholly inappropriate, to make digital money system costlier than cash money system. We have to be very, very sane. We have to be very, very careful. We have to be very, very honest. Let's consider money and dimensional homogeneity. Money is used to buy goods and services. On the right-hand side, that which you buy is priced on the basis of effort, cost, incremental cost, risk, and incremental risk. This applies to services. This applies to goods too. So goods and services are priced on the basis of effort, cost, incremental cost, risk, and incremental risk. On the left-hand side, digital money is priced on ad valorem basis. It has no association with effort, cost, incremental cost, risk, and incremental risk. Dimensional homogeneity is the quality of an equation in science, engineering, and economics. The quantities and the processes should have the same units on both sides of the equation for balance and equilibrium. On the right-hand side, pricing is on the basis of effort, cost, incremental cost, risk, and incremental risk. However, on the left-hand side, digital money is priced on an ad valorem basis. This has no association with effort, cost, incremental cost, risk, and incremental risk. In my view, the left-hand side and the right-hand side should both be priced on the basis of effort, cost, incremental cost, risk, and incremental risk. India's so-called digital champions have built their digital payments and digital businesses on legacy thinking. They're pricing their digital services on the basis of effete and high cash-based systems. And these founders, managers, and chief executives are amazingly active at conventions, conclaves, and conferences, making eloquent presentations on digital disruption. I see no disruption at all. I just see a continuity of a system which is very expensive. And more of India's so-called digital champions are building and operating their digital systems on the basis of legacy thinking. And obviously, these are the participants at conventions, conclaves, and conferences listening to the eloquent presentations of their gurus. This is not going to work, and it shouldn't work too. Consider debit cards. The transaction fee on debit cards is based on the value of the transaction, but the service provider does not provide any funds. There's no credit risk, there's no market risk. The service provider has nothing to do with the underlying value of the transaction. The service provider, of course, checks for fund and limit availability, but the checking is a binary go, no-go action that has no relevance to the value of the transaction. Worse, the service provider charges the receiving merchant on an ad valorem basis or percentage basis. The truth is, this service is merely a facilitation of transfer of money from a customer's account to a merchant account, and the effort is not related to the magnitude of money moved. There is, of course, no risk. The same can be said for digital payments. The transaction fee is ad valorem. There is no credit risk, no market risk, no provision of funds. The service provider, of course, checks for funds availability, but once again, the checking is binary and has nothing to do with the value of the transaction. The truth, the payment service is merely a facilitation. The service and the effort are not related to the magnitude of money moved, nor is there any risk. The new digital businesses are converting digital benefit into a digital burden. And we may end up croaking like frogs instead of leapfrogging. We may end up croaking like frogs instead of leapfrogging, and this is not correct at this stage of our digital evolution. Let us not allow inapt and outdated business models to derail our digital dreams and to deter our digital progress. Thank you for your time. Thank you for watching. I'm Ramach. My email is indiagrow@gmail.com, and you could tweet at ramachgramach. Thank you once again.